Welcome to the channel. Here, we provide clear, actionable insights into the complex world of tax and accounting to help your business thrive.
Hey everyone. Moving to the US comes with a lot of firsts, but let's be honest, few are as confusing or as stressful as your very first tax return. So today, we're going to demystify that whole process. We're going to turn what feels like a major headache into a clear, simple plan that could literally save you thousands of dollars.
So here's our game plan. We'll start with a question pretty much every new immigrant has. Then, we'll dive into the single most important decision you're going to make, your residency status. From there, we'll look at your options, weigh the pros and cons, and I'll show you a kind of surprising way to figure out what's best for you. And we'll wrap it all up with a simple playbook so you know exactly what to do next. All right, let's jump right in with a situation that I'm sure feels very familiar to many of you. In your first year here, your financial life is kind of split between two different countries. And that creates a really big question mark when tax season rolls around. And this, right here, this says it all. You're juggling money you made back home, money you're making here, maybe your family situation has changed. And at the end of the day, all you want to know is, how do I make sure I'm not paying more tax than I have to? This is about so much more than just filling out forms correctly. It's about getting your family's financial life in a new country started on the right foot. So, to figure that out, we have to start with the absolute foundation of U.S. taxes for anyone new to the country. I promise you, if you get this one idea, everything else just clicks into place.
And that big idea is something called tax residency. All it means is, does the U.S. government consider you one of their taxpayers? If you are a tax resident, they expect you to report your income from all over the world, not just what you earned in the U.S. Now, I know what you're thinking. Worldwide income? That sounds awful. But just hang on, because sometimes it can actually be a good thing.
So how do you even know if you're a tax resident? Well, there are 3 tests. The first 2 are super straightforward. If you're a U.S. citizen or you have a green card, you're a tax resident. Easy. But for most new immigrants in that first year, it all comes down to number 3, which is basically the 183-day rule. You know, you just count up how many days you were physically in the United States.
And this is where it gets really interesting, because that number, the number of days you've been here, doesn't just give you a label. It actually lays out a roadmap with 3 very different paths you can take to file your taxes. Just take a look at this. You can see how your options really open up over time. If you're here for less than a month, it's pretty simple. You're a non-resident, no choices to make. But the longer you're here, the more power you get. And see that last row? Once you cross that 183-day mark, you unlock this really powerful strategic choice that can honestly change the whole game for you.
So the strategic choice has an official name. It's called an election. But I want you to think of it like this. The IRS gives you a default setting based on how many days you were here. Making an election is you actively telling them, thanks, but no thanks. I'm going to choose this other status because it works out way better for me. It's you taking control.
And this brings us right to the heart of it all. If you've been in the U.S. for more than 183 days, you're at a fork in the road. Do you stick with the default dual status, or do you make that election to be treated as a full-year resident? Let's break down the difference. Okay, the biggest difference, and it's a big one, is how much income you have to tell the IRS about. The default way, dual status, means you only report your U.S. and other worldwide income from the day you got here. But if you make the election, you're agreeing to report your worldwide income for the whole year. And I know, you're looking at that and thinking, why on earth would I ever do that? Just hold that thought. Because here's the first huge payoff. As a dual status filer, you are not allowed to take the standard deduction. That's that big, flat amount most Americans use to lower their taxable income. You have to itemize every little thing. But if you elect to be a full-year resident, boom! You get to use that standard deduction, which for most people new to the country is a massive win. And here's the other game changer, especially for couples. If you're dual status, you have to file separately from your spouse, which almost always puts you in a higher tax bracket. But making that full-year resident election unlocks the power to file jointly. This is huge, because filing together as a team can push your income into much, much lower tax brackets. So let's put all these pieces together, because we've officially arrived at the most counterintuitive but also the most important part of this whole strategy.
I mean, it just sounds like a trick question, right? Why would anyone in any universe voluntarily tell the government about more income than they absolutely have to?
And the answer is a definite yes, but only if it's a strategic move. See, by reporting your income for the whole year, you're not just adding to the top line, you're unlocking those two superpowers we just talked about, that big standard deduction and the lower tax rates from filing jointly. It's like you add a little to the top, but then you get to subtract a huge chunk from the middle, so the final number, the tax you actually pay, is much smaller. And we're not talking about pocket change here. This isn't just theory. For a typical family in this situation, making this one choice could easily mean thousands of dollars in real tax savings. The difference between just taking the default and making a smart choice is massive. So if you remember one thing from all of this, let it be this. Don't get obsessed with the income number you start with. The only number that matters is the final number at the bottom of the tax form. Your goal is the lowest possible tax bill. And sometimes the road to get there is, well, it's not the one you'd expect. Okay, so you get the strategy. Now, what do you actually do? Let's lay it out step by step with a really clear playbook. Here's your action plan. First, count your days in the US. That'll tell you what your default status is. Second, based on that, figure out what elections or choices are even available to you. Third, and listen up, because this is absolutely the most important step, you have to run the numbers. Actually prepare a draft tax return for each option. Put them side by side. And finally, the easy part, choose the one that results in the lowest final tax payment. And that quote really nails why this is all so important. Filing your first U.S. tax return isn't just some chore you have to get through. It's an opportunity. It's a chance to be strategic and make sure you're not paying a single penny more in tax than you legally have to. So, I'll just leave you with this final question to think about. By just accepting the default option without looking at your choices, are you leaving money on the table? You might be. The key is just to be informed and proactive about it.